Hey, this is Bubble Analytics, and this week's attempt to mildly perturb the market gods comes with a strategy around the commodity channel index and the Schaff trend cycle. So the Schaff trend cycle is a combination of MACD and a stochastic oscillator. It's designed to detect market trends faster than a traditional sort of MACD signals. We're going to use it today to indicate bullish and bearish trend. That's the one in red here. And then the commodity channel index is slightly different. What it does is compare its typical price to its average and then normalizes that using a mean deviation. And that's the one in blue here. What we're going to do in terms of the strategy is, like I said, we're going to use Schaff trend cycle to dictate bullish and bearish trend. So anytime we're above 20 and CCI turns up, we are going to buy. And then if we are below 20 on the Schaff trend cycle and CCI turns down, we are going to sell. So effectively, our red indicator here defines the trend, and when CCI turns up or down, that is going to define when we enter and exit the market. So if you are ready to start coding that up, please read the disclaimer. Okay, let's code this one up then. And to begin, I've opened up a fresh Jupyter notebook, renamed it CCI STC, and I'm just going to click on the first cell, hit Schaff return a few times to create some empty cells. We will be pasting in, to save a little bit of time, from our template here. The template contains code snippets that we use each time to create a strategy and then backtest it. Both the completed notebook and the template will be available to download for free via our website, www.bubble-analytics.com. It's via our GitHub profile. The link is in the footer there. So let's make a start then. And to begin, as with all coding projects, we're going to import our libraries. The libraries contain pre-built functionality we're going to make use of to run our backtest. Next step will be to download some historical market data from Yahoo Finance. To do that, we're going to be using the Y Finance library. If I paste that in, hit Schaff return to run it, this is the output that you should get. The key line is the one at the top. So if I just comment these out, you can see that we imported Y Finance here as YF. So we're telling it that we want to use the Y Finance library using the download method to take 10 years worth of daily time frame historical data for the NASDAQ 100 ETF QQQ, and then we are storing it in a data frame called DF. If you want to see what's in the variable DF, you just write the name, hit Schaff return, and this is what it looks like in raw format. And all these lines here do is tidy it up into a more readable, typical sort of CSV file looking format. So next step then is to create our indicators. We're going to start with the Schaff trend cycle. This is basically a combination of MACD and a stochastic oscillator. It takes three numbers in terms of its calculation. So we're looking for a fast moving average, which in this case the default setting would be 23, a slow moving average, which is a 50 period exponential, and then that is smoothed using a 10 period standard moving average. So three numbers, 23, 50 and 10. So to create the indicator, I'm going to define a function called STC, and we're going to tell it where to look for our close prices so we can create the averages. So it's going to take four parameters, data, and then the three numbers. So if I create that, so first job then, just like with MACD calculation, we're going to calculate fast and slow moving averages. So for our fast moving average, these are exponential moving averages. So for this one, the fast one is 23 and the slow one is 50. We're going to play around with these to get a better output from our indicator, but we'll just code it up as standard for now. So fast would be data.close, and then the exponential moving average method, which is EWM, and then our span would be equal to N1, our first number, and then once we have all those lookback window values in place, we calculate their mean. So that would be our fast moving average. We're just going to copy that down for our slow moving average, but instead of using M1, that's going to be N2. And then MACD is effectively fast minus slow. So that would be your MACD. And then if you were recreating MACD now, you would just create a MACD signal, which would be a smooth moving average of MACD values. But in our case, what we're going to do is add in a sort of stochastic method, really, to calculate our indicator line. So, and with stochastics, what they look for is high and low values within a look-back period. So we're going to create functions that take the lowest value within a specific rolling window of MACD values here. And again, if we come back to the definition, for its default, that's typically the 10 period moving average. So we'll just go with that to start. So I'm going to call that low MAC and high MAC. So basically it's the lowest value within MACD. That should be an equal sign. Okay, so our low MAC then is going to be a rolling window of MACD values. So MACD dot rolling, and then that will be N3 as our number. And we take from that the minimum value. So, and then for our highest value, we're just going to copy this down and amend it very slightly to take the maximum value within that window. So effectively we're taking a rolling window of MACD values that we calculated here, and from that taking out the minimum value for the low MAC and the highest value for the high MAC. And then our STC calculation then is basically MACD minus the low MAC value, and we should have that in brackets, divided by the high MAC minus the low MAC. So, and that also should be in brackets. In fact, they should all be in brackets. So we'll add these in. And then once we have that, we multiply that by 100, and that's what is going to give us our STC, our Schaff transcycle values. So from this whole function, all we're looking to return is the STC values. And then I'm going to create a column within our existing data frame to store these. So tell it the data frame we want to add it to and the name of the column we want to create. And that would be equal to call our function, which takes in data, so tell it where to find the data, df, and the three numbers, so which were 23, 50, and 10. So if we now run all that, what you should see is we now have values in our STC column. So let's now plot that on a chart just so that we can have a look at what it looks like on a chart, and then we're going to configure it a little bit just to make it better at identifying the trend, or staying in a bullish trend for longer rather than sort of oscillating up and down between 0 and 100 too quickly. So let's get it on a chart. I'm going to come back into my template and go into our chart section here. So we're going to create a subplot. When we have a look at a price chart, so for example here, this is all one column with two rows. So price is in row 1. The indicator is in row 2. So we're going to recreate that from our template here using this subplot section from Plotly, which takes 2 rows, 1 column, shares the axis, and then this part here just tells you what percentage of the screen real estate you want price and then the indicator to be. So I'm going to take this entire section here and paste that into our codebook. I'm going to leave a little bit of gap to create the other indicator. So we'll paste that into our codebook here and make a little bit of sense. So that's price on row 1 here, and the second row is going to be populated with our Schaff trend cycle data. So what we are going to need is to add some indicator data to our indicator subplot. So that's this code snippet here. So I'm going to grab that, add that in, and then what we need to tell it is where to find the values we want to represent on the chart. So in this case, it's going to be in the STC column. So I'm going to change this section here to STC and make that like that. And then we will make it 2, and I'll leave it as light sea green for now. So now we've got price in row 1 and our indicator values in row 2. Let's start to render the chart. So I'm going to take, excuse me, I'm going to take all of this section here and just paste that into our chart, and then we're going to amend it slightly. So I'm not going to save an image. If you wanted to, just rename it whatever you want, and scale, the higher the number here just is how big a file size and how crisp you want the chart to render, and that will just save in the same folder that you have your code book in. But I don't need that, so I'm going to get rid. This next section here, because we're going to display the date on the x-axis, the range breaks, what they do is get rid of days of the week where we don't have any data. So because this is market data, they're not open on Saturdays and Sundays. Plotly will render a gap for Saturday and Sunday unless you have this bit in here. So effectively what we're saying is create a range break that starts on Saturday and ends by Monday. So that's that done, and then all these bits here are really just you styling your chart. So we're going to use the Plotly dark theme, the chart width 1100, height 700, and then updating the grid colors. And then the last thing to do, because we are wanting to represent the date column on the x-axis, is just to take this section, this line here, and pop that there. So if I now run this, fingers crossed. Okay, there you go. So now what we're showing here is our Schaff trend cycle below and our price data above. I think that's the first couple of hundred values. See how we've got 2,515 rows here. What I'm going to do is take the last 350 and start that at 2215. And now we've got more up-to-date data. So what you can see here with the Schaff trend cycle is that once it hits overbought, in bullish conditions it just stays overbought, so the value just remains 100. And then as it drops out of overbought, if we get a bearish trend, so if price starts to go flat to down, you should see it stay more often at 0. And what we're going to do is use these values to indicate bullish and bearish trend. But in order to help the indicator do that, we're going to customize it a little bit. So first thing I'm going to do is add in some horizontal lines across here, so we've got a frame of reference. But so to do that, we're going to add in our H lines. So add levels line to an indicator, this little code snippet. So we're going to grab this little bit here, and I'm going to go back up into my chart settings. And I want to add 3 lines. So I'm going to add one at 80, one at 20, and one at 50. And all I'm saying here is in row 2, create a horizontal line and put it at 80 on the y-axis. So if I run that again, you can see now we've got some sort of frame of reference. This is the overbought zone, this is the oversold zone, so on and so forth. So let's now go in and amend our Schaff trend cycle calculation slightly, just to make it a little bit better at staying overbought when we have bullish trend persistence, rather than getting these sort of choppy back periods that would take us out of long trades or tell us not to take long trades. So to do that, all we're going to do is amend our values here. So you could, here's a little trick actually, right? So do you see for the exponential moving average, we always have to say span equals N1. If you don't do that and you just had a number, so if I say, for example, I got rid of that, what it would do is double the value and then add 1. So N1 here is 23, but if I don't have span equals there, it's going to be 46 plus 1, so 47. So that there effectively would become a 47 period moving average. For the 50, that would become 101 a period moving average. So if you ever want to sort of just double the values that you're going for there, you can just remove the span equals in here, and it does the same thing. And then I'm going to increase the look back period to 26. And if I now run everything again, what you should find is we are much better at indicating when we're in a bullish trend versus when we're in a bearish trend. So as price goes flat here, you can see we drop out of the overbought zone, and price has basically stopped making a new high from, that was October the 30th, it didn't make a new high until April. So so effectively, as we dropped out of overbought here, and then we've stayed at, in the lower bounds in our sort of oversold area, or our bearish trend area here. So up until that point, and then as we made the low, suddenly Schaff trend cycle springs into life, moves back above 20, and is now currently in bullish zone. Excuse me, as we make the low and start to move higher. So this indicator is the one that we're going to use for our trend, to dictate our trend, and then we're going to use CCI for our buy and sell triggers effectively. So we're going to use CCI to tell us when to buy and when to sell, and this just tells us whether we can take a long position or a short position. So let's do CCI next, and CCI looks quite complicated and sounds complicated, but actually isn't too bad. So this is the indicator here. It was developed for commodities, but it can be used for anything really. It works really well. Let's have a look at the calculation. So it looks like this on the chart. So again, it's an oscillator that moves typically between sort of minus 200 and positive 200. And you can set overbought and oversold zones at 100 or wherever you want really. But we're not going to use it like that today. We're going to use it a little bit differently. Stock charts is great because, especially with a complicated indicator calculation, they give you an Excel spreadsheet you can download. And that is really useful because you can go in and have a look at the Excel functions that govern how the indicator is calculated. Go and have a look at the formulas and then replicate that in your code book, and that's kind of how I got going with it really. But they also define it here. So effectively what we're going to calculate is a typical price. And that is just the high, low and close added together and divided by 3. And then from that we create a 20 period simple moving average of the typical price. And then we've got a constant here at 0.015. And the mean deviation is the only really sort of tricky bit. And what it does is it takes the rolling window, takes all the prices within that 20 period rolling window and compares them to the average. So it creates a deviation from the norm. So so we've got our typical price here, and we create our 20 period simple moving average. So within the 20 period moving average, there is 20 different values for the typical price on each day, 20 days worth of values for the typical price. And what the mean deviation does is compare each of those values to the overall average and calculate the difference between them, and then takes all those mean deviations and applies a constant and averages those. So I probably haven't explained it brilliantly, but let's just go and add it, and then we'll get it on our chart. So we're going to define a new function called CCI, and CCI, all it needs to take in is some data and our look back window. So look back window is going to be n here. So just create a little bit of space. So the first thing to calculate then is the typical price. So we're going to call that TP. And all that is the high, low and close. So it's the data high plus the data low plus the data close. And that is all in brackets. And then we divide that by 3. So that's typical price, and then the average, so which we're just going to call moving average here, is the rolling average of typical price based on n, which is our look back period. So you could create CCI for this default is 20, but you could create that for 10, say for example, it would take a 10 period rolling average of typical price instead. So to create that rolling average then we take our typical price we just calculated above, add the rolling method for a rolling window, and that's going to take n, our look back period, and once we have all those values we're going to create the mean. So that's the easy part of it. The mean deviation calculation looks complex, but hopefully you'll sort of get it. But basically we're taking a rolling average of typical price. So same thing that we did above there. So, and for each value within that rolling window, we're comparing it to the overall average. So we're going to apply here a lambda function that takes each value within that rolling window and compares it to the average MA. So we're going to use the lambda function here. Let me just get this in place. So it'll be lambda x, And for each value in x, we're going to use NumPy. So NumPy is a good maths library that you can, for more complex sort of calculations, you use NumPy rather than just pandas standard. But so NumPy we imported in our library as NP. So where you see NP, we're using the NumPy library. So what we want is the average, and from that average we want an absolute average. So effectively, if the difference between the value and its average of typical rice, if the difference between that value is a negative number, we're just removing the minus sign. So we're going to take the mean, the absolute mean of x minus x dot mean. So it would be x, let me just make sure I'm getting this right. So x dot mean, it would be, wouldn't it? And then we want some more brackets for these two brackets here. Yeah. So that would be it. And then I just want raw values. I don't want any sort of adjustment based on weightings applied to each of them. So I'm going to hit raw equals true here. But so effectively what we're doing is calculating a rolling window of typical price. So 20 prices or whatever look back period we pick, comparing them to the average and to their mean, and then storing all those differences and creating an absolute average of them. And our, if that makes sense. So, and then CCI then is going to be our typical price minus our average divided by our mean deviation constant, which is 0.015 times the mean deviation figure. So, and if we return that, what we should find is we get one output. So if I return CCI here, and that's it. Now, if I want to create a new column within our data frame, which I'm going to do now, I'm going to call that CCI. I just call my function here, CCI, tell it what data to look at, df, and then what look back period I want to use, and I'm going to use 20 periods. So if I now run that now, what have I done? Oh, there we go. So if I now run that now and have a look at df, what you can see is we've got two new columns, one for the Schaff trend cycle, one for the CCI calculation with figures in there. And now we're going to represent it on the chart. Before I do that, I'm just going to tidy it up a little bit, get rid of these nan values, not a number values. We're going to use the drop NA method for that. So from our data frame df, we're going to drop NA, and we're going to do it in place on the existing data frame. And if I run that again now, so we've just got nice tidied up data set here. OHLC data. Because I reset the index. I'll tell you what, let me run the whole thing. And there you go. So now we've got price as the index, date column, OHLC data, and then indicator values, STC and CCI. So let's go and represent these on the chart then. At the moment, all we've got is the Schaff trend cycle. So let's go and add the CCI. So to do that, we're going to have to create an extra row. So I'm going to change the number of rows here to 3. Column is just still the same. And then I'm going to muck around with these bits. So price is going to get 50% of the screen real estate. And then the individual indicators are going to get 0.25. So 25%. So that's now we've got 3 rows on there. And then we need to tell it where to find our CCI data. So I'm just going to copy this code snippet here, which is how you add indicator data onto the chart. And I'm going to change that to row 3 and change the name of it to CCI and tell it which column in our data frame to look for, which is CCI. And then change, I'll tell you what, we'll change this to red. And yeah, we'll leave that. Okay, so if I now render this, what you should have is CCI here at the bottom, Schaff trend cycle here at the top. What I'll do is, how many rows have we got? 2490. So we'll make that 22, I'll tell you what, 2150. Let's run that now. Okay, a bit better, we've got more of a frame of reference. So Schaff trend cycle looks okay, but CCI, we're going to add a bit more of a frame of reference in here. So if you remember, we added horizontal lines to our indicator subplot here. We're going to do the same thing now. We're going to need 2 of them. So I'm just going to copy this. and we're going to amend it very slightly. So we need 2 of them. We're going to make that on row 3, and we're going to put one line at 200 and another line at minus 200. Make that row 3 again. Run that all again, and now we have Schaff train cycle above, CCI below. CCI looks a bit squashed there, doesn't it? Let's go and have a look at our settings. No, 50, 25, 20, that seems fine. What we'll do then is just increase the chart height. So see how the indicator looks a little bit squashed. Let's just go and increase the chart height. And now, yeah, that's much better. Okay, and then to distinguish which one is which, if you come back into the template, we can add a chart title. So we're going to add a subplot title here, which we will chain. I'll show you how to do that in a second. So I'm going to take this code snippet here and go back into our chart settings and add them in. So our first one then is our commodity channel index indicator. Do I spell that right? Probably not. Okay. So, and if I just run that, let me just see where that goes. Okay, that's pretty good. So, commodity channel indicator, that's there. And then this one is going to be the Schaff trend cycle. What we're going to do is chain this on. So when you chain on a label, what you want to do is take all the value from the dict section up until this last, or this first sort of bracket here, and leave these 2 square bracket and then normal bracket there. So I'm just going to copy that, and then go back. So I'm just going to copy that and put a little comma there because we're going to be chaining something on, and add in that here. And I'm going to change this to the Schaff trend cycle indicator. And then let's have a look. I'll see if we can try that at 0.4. So these xref and yref, all they do is make it. Well, we're going to have to amend it, but all they do is make your canvas a 1-to-1. So that when you plot X and Y, you're telling it where to put that label. 1 on the x-axis, which is along the bottom here. 0 is on the left-hand side and 1 is on the right-hand side. And on the y-axis, 0 is at the bottom and 1 is at the top. So if you say X is 1, you're basically saying put this label as far right as it can go. And then the Y value there dictates how high up from the bottom it comes. So we're going to change this a little bit. I think that'll be all right, won't it? Yeah, that'll do. You could probably bring it in a bit lower. So what about we make that 52? Oh, bit too square. You could play around with these for ages, but you get the point. So we've got a nice price labels telling us, not price labels, indicator labels telling us which each of them are. And then the idea of the strategy then is going to be to let our Schaff trend cycle tell us when conditions are bullish and when they're bearish, and then use our commodity channel index to tell us when to go long and when to go short. So typically with an oscillator, you would be looking for oversold entries to tell you when to buy. So, but with something like the commodity channel index, when we are in bullish position, it never really gets oversold. So with a good strong run up to the upside, it just stays in above 0 for ages. So rather than looking for an extreme level to get long at, what we're going to do is instead chart every time it turns up. So while so for example, with Schaff trend cycle in bullish position, every time the commodity channel index turns up, we're going to buy. So in order to chart that then, we're going to use the .ilock method, and effectively a .ilock in our signal function, .ilock I would be today's value, and .ilock I minus 1 is yesterday's value, I minus 2 is 2 days before today. So effectively, if this is I, April the 7th is I, today's value, you can see it's higher than I minus 1, April the 4th value, but April the 4th value was less than April the 3rd value, or I minus 2's value. So, and that's how we're going to chart, that's how we're going to pick out where the turn has taken place. So let's start coding that up then. Let's go back into the template, And what I'm going to do is take this signal function here. So all the signal function does is run through our data set looking for when our buy and sell parameters have been hit. So it takes in some data, initializes a variable called signal, and for I in range basically just is our loop. It's basically running a loop, so it's going to run through each of our lines in order, looking to see whether our buy parameters have been hit or sell parameters. Where it sees a buy signal, it's going to put 1 in the signal column. Where it sees a sell signal, puts 2. And if there's no signal, it just puts a 0. And then this creates an actual column called signal within our data frame. So for our parameters then, rather than waiting for Schaff trend cycle to hit sort of above 80 and stay above 80 to indicate bullish trend, instead what I'm going to say is anytime it moves back above 20, or anytime it's above 20 effectively, we're going to consider that bullish. And we will look for long positions as long as Schaff trend cycle is above 20. For our sell signal, we're going to say anytime Schaff trend cycle is below 20, we're going to look for short trades, or at least get out of long trades. And then for our actual triggers, every time CCI turns up while in bullish trend, we get a buy signal, and each time CCI turns down, that's when we get a sell signal. So let's code that up then. So first parameter for a buy signal then would be data.stc.ilock_i. So today's value of stc must be greater than 20. So that's our first parameter to buy. And then I'm going to create some new lines. So we're going to chain on little bits here, each of them in brackets. So for our second parameter then, our current value of CCI needs to be higher than the last. So data.cci.ilock_i needs to be greater than the value that came before it, cci.ilock_i-1. Okay, and make sure you don't forget your bracket. And then on a new line then, I'm just going to copy this. So, and then to indicate the turn has come, so I-1 had to have been less than I-2. So I'm just going to change that to a less than, and what that should do is give us a buy position. I think I've got that right. We'll check it in a minute. So for our sell signal, it's exactly the same, but in reverse, effectively. So what I'm going to do is just copy that across into here, and then change it. So for a sell signal, Schaff trend cycle will be under 20. Our today's CCI value would have to be less than the one that came before it. And what have I done there? There you go. And the value yesterday would have to have been greater than the value 2 days ago. So, and that would give us our sell signal. So if I now run this, what we should have is a new column called CCI, called signal, with our buy and sell parameters. In fact, we got a sell signal there, look. So let's go and just check that out. So for a sell signal, CCI must be underneath 20, which it is. And the value today needs to be less than the value yesterday, but the value yesterday had to be more than the value on the day before it. So yeah, sell signal is working. So it looks like that logic is good. So let's then represent on our chart when we're getting buy and sell signals. So I'm going to come back into our template, and I'm going to grab this code snippet here. So, and then we will put it in this gap here. So this function is quite straightforward. All it does is look for signal equals 1 in our signal column, or signal equals 2. Where it sees a 1, it returns the value of the low column minus an offset. And where it sees 2 for a sell signal, it returns the value of the high column plus an offset, and then creates 2 new columns within our data frame, one for long entries, one for short entries, with the prices as at which we got a buy signal or a sell signal. And all that does is tell Plotly where to place the markers on our chart. So once we've got this in place here, what we can do is come back into our Plotly section here and just grab the entries code snippet. So, and all that is doing is, once I've got it pasted in, so it's taken the value in our long entries column or short entries, creating a marker of which is going to be size 7, and in our case is going to be a white arrow up for a long entry and a gold cross for a short entry. So if I run all that again, let's go and have a look on our chart. There we go. All right, so now we're seeing quite a lot of sell signals where the trend is starting to turn over and then during a downtrend, and what we're not seeing is any buy signals during that period, which is good. And this is where Schaff trend cycle is very good. And then what we are seeing is buy signals when the low has formed and the trend has started to be decent to the upside. We're seeing buy signals, and we don't see a lot of. There's one there, just there. What are you doing, buddy? So there's one there, but effectively you don't get a lot of sell signals during this period here. You just get buy signals, so pretty good. But we are definitely slow to capture the actual turn, aren't we? So, and you could use Schaff trend cycle for this. In fact, we might do. Shall I add it in? Yeah. All right. So, what we're going to do is create a third buy signal parameter. So, what I will do is just grab all of this and copy this. I tend to do this quite a lot, really, just to capture everything you can out of your indicator. So what we're going to say for this one is what we're going to look for is the Schaff trend cycle to move back above 20. So it doesn't happen very often, but basically you could get another buy signal here. So as we start to come from oversold into back into sort of bullish territory, we're still waiting for CCI to turn up at that point. So we're slow to get our new buy signals once the bullish trend has formed. So instead what we're looking for is just to give ourselves maximum opportunity by creating a buy signal roughly around here, I think, as Schaff trend cycle comes out of an oversold condition, starts to move back above 20. So I'm going to create a third one within that. So effectively what it will be is our Schaff trend cycle value yesterday, so I minus 1, is less than 20, and our Schaff trend cycle today, so dot I like I, is greater than 20. And I'm going to put a 3 in the column for that one, and if I run that now, I don't know if we'll get any from... We won't be able to see them from here. All right, so let's just code it up and have a look on our chart. So what I'm going to do is duplicate this section here. So we're going to add more long entries. So I'll just call that more long entries. And if the signal equals 3, then we take the value in the low column minus the offset and put it into a column within our data frame called more long entries. And I'll just amend this here. And then if I come back into our chart section here, I'm just going to copy this code snippet across, and we're just going to amend it slightly. So we're going to take in the values of our new more long entries column, and I'm going to make it a blue marker, and we'll call that more long entries. All right, so if I run everything again, what we should see here then is a quicker way to get long. Well, not by much, but still it works well here, look, right? So this is where Schaff's great, right? Because during this section here, we didn't really outright drop, but we went flat for ages, and it didn't tell you to get long at any point. It was basically saying, look, watch out, because this is the kind of position where price can fall over. But then as we started to rocket to the upside, you got an early entry here with Schaff coming above long before you got your first sort of white entries. And the reason that you didn't get them is that CCI, when price is really moving higher, you're not getting any kind of pullback in this indicator to give you your long entry. So it works, or it's kind of a bit of an additional, but probably won't get very many trades from it. And in fact, we can have a look at that. So let's go and have a look at our value counts here. What this tells us is the values within our signal column. So you can see that we got 336 white long positions, so the first long position we went for, and we got 23 blue long positions, so the more long entries only gave us 23 signals, and then for sell signals we got 192. So let's backtest it. Now that we've got enough entries to play with, let's backtest it. So I'm going to come back into my template. I'm going to take the backtesting script and I'm going to pull the whole thing and whack that into our code book, and then we're just going to amend it. So we're not going to trade on the close, we trade on the open following a buy or sell signal, and we're never going to hedge because we're only going to have one open position at any one time. And that's what this line here does. We've set a commission equal to 0.1% fee on a round trip, so that's a buy and a sell, and margin equals 1 means no leverage. We're starting at 100 grand starting capital, and we are pulling in data from DF where we've got all our indicator values, etc. And we're going to run this MyStrat strategy, which we define here. So for our actual code, all this function does is pull in the values in our signal column, and then we create a strategy class called MyStrat, initialize that here, pull in the values from that signal column, and then this part is what really governs it. So where sell signal equals 1 or self.signal equals 1, that's a buy position. So if we are already short, or we close that position, or if we don't already have a position, just buy. So either way, buy with 99% of our available capital. If the signal is 2, if we are long, close that position. If we don't have a position, either way, self.sell, so get short with 99% of available capital. This part here you would include if you wanted to give yourself a time limit. So you could have a position where you went long, put a 3% profit target and a 3% loss, and but if you haven't hit either of those targets within 5 days, for example, you would change this to a 5 and keep that in the script, and then that's it, right? So let's just run it raw for the time being. So we've got more than one buy signal, don't we? So let's copy this for our secondary buy signal, and to make that an LF, and that's going to be a 3. So basically, if we get a 3 while we're already short, we're going to close it, or if we don't already have an open position, we're going to buy again with 99% of available capital. So let's just run it. We'll run it raw, and this is what it looks like. So the return was 62%. We're in the market all of the time. We take a horrific drawdown equal to what the Qs gave you, probably during the 2021, 2022 bear market maybe. Your worst trades 15%, and you only make 53 trades with a really poxy win rate. And the reason for that is that you are only ever buying, you're only ever selling a long position when you get a corresponding sell signal. So for example here, during this period here, you would have been short from this point, long here, and then long and holding this position until you got this corresponding sell signal, and then you are short all the way down this downtrend until you got that corresponding buy signal. So basically you're just holding your positions and flipping between long and short all the time. So in order to get around that, or to actually make this a strategy, you're going to have to apply stops and losses. Definitely your most effective stop is a profit target. So let's do those first. Normally what I would do is just comment out the actual buy-in here, just so that we can run it raw. So you can see that on its own does quite well. So if you are just taking the white buys here, and so for example you would get long at this point, and the first time you would sell would be that point, long again here, selling here, short until you got this buy signal here, so a losing trade, and then you'd still be long from this point onwards. But so that actually does quite well, 259%, but your drawdown quite large, your worst trades are awful, and you only have 23 trades, of which you don't win them all, right? And considering that's buy and hold effectively, not brilliant. So what we're going to add is some stops and profit targets. For this one, we've got a profit target of 1.045 times price. Now price is this bit above. Effectively it takes the closing price the last closing price following a buy signal. So you would be buying at the open the next day. So, and from that price there, we're going to key our stops and losses. So effectively it's 4.5% above that price there is our take profit target. And then for our stop loss, we're going to make that 5%. So in our case, our stop loss is going to be 95% of that price there. So, and then if we run that again, we just about increase our return, we lower our time in the market, but we reduce our drawdown quite significantly. Our worst trade is very much reduced. We get a much higher number of trades and a higher win rate. So just by adding stops and losses there, most of the time a loss is going to impact your strategy negatively, but I think with this one, especially given that we're going for much higher targets on the profit side, normally I'd go for 2 to 3% on the daily time frame for the Qs, but I think because we're going for higher profit targets, it's good to have a stop loss here. So let's add in our secondary buy signal, and for this one we have gone with a profit target of 5%, so that is going to be 1.05 times price. And for a stop loss, we're going to keep it quite tight, so that is going to be a 2% stop loss, so 0.98 times price. And running that again, we increase our return only slightly, increase our time in the market very slightly. Our max drawdown's a little bit worse, but the worst trade is still far reduced from running it raw, and we've increased our number of trades and still got a decent win rate, so not too bad. If I just remove sell signal equals 1, that strategy on its own does okay. So for this one, we've set quite a high profit target and a short stop. Like normally you give it a lot more room than 2% with your stop, but what this one is looking to capture is situations like this. So this is the blue buy signal. What it's looking to capture is this kind of movement here, where you get very little pullback because the low has just formed, taking Schaff trend cycle back above 20, and the low has just formed, so we've got strong bullish momentum. So you shouldn't really have much of a pullback. And if you do get a pullback, like in this situation here, then your stop is quite tight, so you're not really doing a huge amount of damage. So it's looking to win not that many, and indeed it does okay actually, 56%. But our worst trade is only 2.5%, and our biggest drawdown was 8.6%, so not bad. And then let's do the short side. And the thing with the short side is, can you get it to make a profit? If we run it raw, it gets killed, so you lose 54% of your value. Drawdown's horrific, worst trade's horrific, 18% win rate, which is awful, right? So with shorts, you absolutely must have stops and losses, and with shorts, you are looking really to capture trends like this. And most people are looking to short the high and then hold it and sell right at the bottom. That is a fantasy. And instead, what you should be looking for is something that tells you the trend is in play and then takes regular profits before getting short again, taking another profit, short again, taking another profit. That's what you're looking for. And if the trend changes or the trend doesn't lead to downside, like look at this section here where price just goes flat, you would still make a little bit of money on the short side, but you would want quite a tight stop, because if it starts to move against you like here, you're still getting sell signals at this point just before price absolutely rockets against you. So you want a tight stop, and then you want a profit target that is reasonable. This is what you optimize basically. So you want to capture 2 or 3 or 4 trades during this kind of trend basically. So what we've gone for here is a profit target of 6%, so that would be 0.94 times price, and we've gone for a stop loss here of 1%, so super tight, which means your win rate is going to be low. There we go. So but if I run that now, you can see that overall it makes 16%, and given that this is a compounding strategy where you are always investing 99% of available strategy, so compounding your return, any kind of win on the short side does really well for you. So yes, your drawdown isn't great, but your worst trade's not that bad. And yes, your win rate is absolutely horrific, and that's because you stopped so tight. But ultimately, it makes a little bit of money, so it's worth adding on. So if I now run the whole thing, what we have is an overall return of 351%. You're in the market a lot. The drawdown is 19%, so better than the market would have given you. You have 235 trades, so enough for statistical relevance. Your win rate is massively impacted. Remember, it's 65% from the buy side, but only 18% on the short side, and that's why the win rate has been so impacted. It's a long short strategy, and your worst trade lost you only 6%. So let's go and have a look at profit and loss graphs and do a Monte Carlo simulation now. So I'm going to take this section here and pop that in here, and we're just going to create our graph, which looks like this, and I'm just going to change this to CCI STC and run that again. So all this is doing is obviously what we're looking at here is the overall trade stats, but within our backtest you can get a list of every trade, so when it was bought, when it was sold. And with our list of trades that we're taking from stats there, all we're doing is creating a cumulative profit and loss graph, taking the P&L value from each trade and then using the cumulative sum method here. And then from that, we're just taking the line and using Plotly to add it on there. I'm going to get rid of this bit because I don't want to save the chart image. But then if we run it, this is what it looks like. And in the main, it is choppy, but in the main makes money. So consistent. Let's go and have a look at the Monte Carlo simulation. So to do that, I'm just going to grab this entire code section here and paste this into our code book. And what this one does is it takes the return percentage from that list of trades and uses that to create a cumulative return. And then from there, randomizes the trade order 100 times and represents those on the chart. So I'm just going to get rid of that section there and change the title to CCI STC. And that's what it looks like. And you can see that what this is meant to do is it's designed to show you what would happen if all your losing trades came at the start. And you can see that we've got quite a good profile here. So in quite a few of the strategies, you were underwater a bit over the first lot of trades. So probably the worst one is this one, where after trade 75, you were 18% down on the strategy before recovering. But overall, pretty good. And definitely something that didn't really get you into a lot of trouble, and had enough trades, I think anyway, to be fairly confident in the results. So given that we have a 19% max drawdown, and we're kind of confident in terms of our risk is covered because we've set stop losses and profit targets for each of our different buy or sell signals, you could probably get away with using a little bit of leverage on this. So if you were to do that, say 2-to-1, you would just change this to 1/2 for margin and then run that again, and you can see it hugely increases your return, 1507. So versus buy and hold, which gave you 605%. Everything else would be the same, number of trades, win rate, worst trade, all the rest of it. And your drawdown obviously doubles because you've used 2-to-1 leverage on the strategy. But there you go. So any questions, please feel free to email in.